How much is this downward trajectory in price action being driven by just model complexity relative to its competitors?
I think that's a small piece here, but no doubt. I mean, this is a black eye quarter for Dara and Uber, specifically around missing the bookings metrics and some of the ride sharing issues. I think you combine that with what they're spending on Eats, and that's really the 1-2 punch of sending the stock down, going in to what could be an avalanche of selling with the lockup expiration.
Lloyd, do you buy the target of adjusted profitability by 2021?
I do. I think it's actually not as much of a stretch as it would appear to be. If you look at the core rideshare business, they came out with segment margins this quarter, 22%. That was a 4 percentage point improvement from a year ago. If they continue on that pace of improvement and get to a 30% segment margin and take the Uber Eats business from the meaningful losses they produced this quarter down to, say, a negative 20% margin, we can get to break even in 2021 just on those assumptions. And when you look at the pace of improvement in the take rates in the competitive environment, what they said about Latin America this quarter, also seeing improvement, to us, it's not a stretch. We think there's a lot of profit power in this business that is just starting to move in the right direction competitively.
Dan, the economics for food delivery, it's been really tough, and we're seeing that play out again in earnings season, including Uber's numbers yesterday. How do you think longer term Uber addresses that part of the business, and what do you think that means for this profitability story?
Yeah, it's a great point, because it's really a tale of two cities when you think about earnings. I mean, ride sharing and some of the core business looks to be heading in the right direction. It all comes down, if you look at it, on Eats. I mean, Eats, they're spending more money than a 1980s rock star. That money continues to sort of bleed on the bottom line. You look at Grubhub last week, I think a lot of investors are really looking at that business, figuring, does it make sense or for them to scale it down? This continues to really be the overhang on the stock, and this is something Dara and Uber are going to need to steer through, as you can see with today, and I can tell you by my conversations with investors, the credibility is lacking in terms of how they're hand-holding through the story.
Lloyd, looking at this quarter from Uber last night, I was reminded of that Indigo Girls lyric, twice as cloudy as I'd been the night before, and I went in seeking clarity. Because it seems like the massive amounts of capital in the delivery space, in the transportation space, are just clouding what the real underlying business model is. I know that they gave that profitability target, and that's nice, but I don't still understand how the model works. Is that a problem for you as you look at trying to project what this company really should be worth to investors right now?
Look, I think that is something that I think has been part of the challenge with the shares since the IPO. There's just a lot of moving parts. You've got a business like Lyft, which is strictly U.S. rideshare. Uber, you've got rideshare globally. You've got a lot of competition globally. And then you've got the Eats business, the same thing, but at an earlier stage with more private capital coming into the space. So I think the magnitude of the complexity has been an issue, but I think the company has done a good job starting to spell that out in more detail with the segment margins and providing a little bit more hand-holding around the trajectory of the business towards profitability. But that's part of, I think, why the stock has struggled.
Dan, we have seen this paradigm shift, right, for a lot of these companies, from growth at all costs to becoming more efficient to finding these paths to profitability. We're seeing it play out with Uber and Lyft. You're also seeing it play out with companies like Virgin Galactic, which hasn't even started its service yet, but last week when the company went public was stressing that path to profitability and gross margins. Real Peloton, which is trading lower today on the heels of earnings. Given the fact that there does seem to be this shift, is profitability the main thing for investors to be honing in on with these companies, or are there other metrics that are just as, if not more important, especially when you look at a company like Uber that has, 5 different divisions to dig into?
Yeah, and it creates a quagmire for Uber and a lot of these companies because they're trying to change their business model on the fly. And I think the worry here is profitability in 2021. If you look at that relative to street expectations, okay, at what cost? What's going to happen to growth? So I think investors definitely put up the white flag in terms of the names not showing profitability. But for Uber, it's going to be a balancing act. And if you look at 100 million plus consumers and monetizing that install base, that's why this is a unique asset. But I think there's just less confidence in Dara and Uber to get through this. That's why these next few quarters, it's going to be a fork in the road situation. This becomes just a massive speed bump post-IPO or a sign of broader issues. And that's why going to the lockup this week, and I think that continues to really weigh on shares.
Lloyd, what are your expectations for the expiration of this stock lockup? I ask that because you look at Beyond Meat, and we saw major selling in that name when that expiration happened. But the stock had also jumped triple digits. It's not the same situation for Uber. It's trading below its IPO price. Do you expect the same sort of selling activity and pressure on shares?
Yeah, I think we're seeing that right now as we speak, but I think we're getting closer to the end of that. And, as you noted, I think a lot of the investors privately in Uber were actually buying the stock at higher valuations privately. So we may actually not get as much selling pressure as people fear. We've talked to a lot of investors who are interested in buying the stock but have been waiting to get this passed. So, once we get this absorbed, it may not, it may take some time to absorb the new supply. We think, it's kind of level set and the stock can start to grind up from here. But I think we do have to get to Wednesday and see how much supply actually comes to market.